Hi, this is Bob McGee, Chief Investment Strategist at WesBanco with an April market update. Headline inflation has increased and the driver is clear. Energy prices have surged. Gasoline prices are up 45% over the last 12 months, pushing the Consumer Price Index higher. Over the trailing one-year period, this inflation measure jumped to a nearly two-year high of 3.3%, up from 2.4% in February. Core inflation rose much less, as we are yet to see the effects of higher fuel costs on the economy. The real economic damage depends on time, specifically how long the conflict with Iran lasts and whether the Strait of Hormuz remains closed. Every additional day the strait stays shut, it tightens global oil supply and raises inflation risk. The U.S. is in a better position than past energy shocks. We are now a net exporter of energy. We still import crude oil, but we also export natural gas. This provides a key buffer most countries don't have. That said, uncertainty remains elevated. Near-term risks still lean to the upside for inflation, and long-term tailwinds haven't disappeared. Investment forecasts call for solid economic growth, easing inflation trends over time, and increasing AI-driven productivity. If geopolitical conditions stabilize, those forces could quickly reassert themselves. The Standard & Poor's 500 has recovered to pre-conflict levels, and forward valuation multiples are now meaningfully compressed compared to a year ago. At the same time, earnings are expected to have grown by roughly 12.6% over the past year, according to FactSet. Higher bond yields remain a headwind for equities and economic growth, but if yields stabilize or begin to fall, that could suddenly become a catalyst for stocks, especially for cyclicals, industrials, and faster-growing companies. On the labor side, after a subdued February report, private payrolls are expanding. The March jobs report showed 178,000 new jobs, and the unemployment rate fell to 4.3%. Importantly, there's still very little evidence of wage-driven inflation pressure. Looking ahead, inflation may begin to cool once energy pressure eases as rent growth continues to slow and tariff effects fade. The bottom line is this: we are in a headline-driven, uncertain environment. Fundamentals, profits, and productivity still support staying invested. Stay diversified, disciplined, and avoid the frothiest areas of the market while navigating ongoing geopolitical risks. For more on what this means to you, please contact your WesBanco representative.